Thanks, Kate. At a time when term deposit interest rates are so low, lots of people often tell me they would love to be able to buy bonds in well-known corporations. Richard Murphy, the CEO and co-founder of XTB, is someone who agrees with this sentiment and has done something about it. Thanks for coming on the show, Richard.
Thanks for having me, Peter.
Tell us about XTB.
Well, XTB is the brand name for a range of products on the ASX. The company that manages them is Australian Corporate Bond Company. But XTBs are today 29, last week it was only 24, before that it was only 16. A growing range basically of individual securities called XTBs that give you...
Oh, okay, so we really get this straight, but obviously I didn't read my briefing properly.
Everybody calls it XTB.
Okay.
It's on our card.
It's a really cool name.
It's a cool name, so yeah.
And your uncool name is Australian...
Corporate Bond Company, because we didn't actually want to be all about us, we wanted to be about the product.
Okay,
there you go.
okay.
Our brand secret.
But that's the company that's listed, is that right?
The products are listed, so we're a product manufacturer.
Of course. Okay.
Kind of like
it's
17
like ETF,
yes.
but it's an XTB.
Yeah.
And instead of being in stocks, you're in bonds.
Yes, except we're not really an ETF, because ETFs are very diversified over an index. These are individual, so it's a BHP bond here, a Telstra bond there, Woolworths, Horizon, etc., etc. And now today we brought out floating rate notes as well. So we had fixed coupon bonds and now floating as well. So that's really what they are.
Let's differentiate between the two. So let's just say that the most basic product, you've got a Telstra one, have you?
Yes.
Okay. So how does it work for my viewers who've got no idea what we're talking about?
So if your viewers have got a portfolio, they've got shares over here and they've probably got some property and they've got some cash, and they probably maybe have some fixed income that's either money in the bank, or maybe they have some hybrid securities, but they're really equity. The problem is you identified you can't really just go out and buy some corporate bonds. So what they would do is basically say, well, buy that Telstra XTB, and that's a 7-year product or a 6-year product, whatever the term is. And for 6 years, they've effectively got all of the economic benefits of actually owning the bond.
Okay, so what kind of interest rate does that bond pay you? I presume you buy it as a big bond.
We buy the bond,
and
put it in the trust.
Yeah. It's a large amount of money, because what is the minimum amount you pay for a Telstra bond?
You have to buy them in $500,000 lots, basically.
Okay.
So, yeah.
So this XTB thing that someone buys, would it be marked XTB Telstra? How is it marked?
It's got a trading code like everything on the ASX. It's YTN TLS, shows you it's the Telstra one. So you basically buy that, and when Telstra pays the coupon, we just pass that straight through to you, so you'll get the coupon. Okay,
and the unit size of an XTB?
$100.
$100?
Yeah, so we buy them at $500,000 lots. Essentially, that goes into the trust. And then we've created a lot of XTBs, basically, and then we sell them in $100 lots. So it also solves that problem as well, because some people could say, well, actually I can access the wholesale market, but I don't want to be paying 500,000 or 100,000 or 50,000. I want smaller amounts.
Yeah, okay. And so therefore, if someone then accessed this Telstra bond in smaller units, they get the equivalent return that you're getting minus the fee that you charge for creating this service, I presume.
Well, we charge the fee up front, so when they buy it, that's it, we're done. We don't get any more fees. So the coupon goes straight to them, and when Telstra pays the principal back, it goes straight to them as well, so we don't touch that at all.
All right. Does anything happen to the value of that XTB like an ETF would?
The XTB is traded on ASX. And when Telstra bonds go down, this will go down. When Telstra bonds go up, this will go up. When they don't move at all, which is quite often, they'll just sit there. So they reflect what's going on in the wholesale market.
So what will be the drivers of whether the price on the XTB goes up or down? I know you've said whether the bond does, but what are the drivers of what can affect the bond price?
And that brings in the fixed versus floating. The fixed coupon ones, interest rates are clearly one of the main drivers. So if the government were to lower rates, that seems less likely after today, or increase rates, that will definitely have an impact on fixed coupon bonds. The floating rate ones, that doesn't have any impact, because that's the point of the floating rate, is to not have that impact.
Okay, but for my viewers who don't get this, if for example interest rates rise, which I think is possible over the next 2 years, what would happen to the price of the XTB?
The fixed coupon XTB will fall, should fall,
go in the
will
opposite
fall.
directions.
The floating one won't have any impact.
That's right. So I guess over time, the floating ones probably will become more popular for the risk-averse top investors?
Not necessarily, because there's a lot of people that say, sorry, Peter, don't agree. I don't think interest rates are going to go anywhere for the next 2 years, and that would be the professional market's current view is that it's going to be flat for 2 years. They could be wrong, you could be right, yeah. You can say I told you so.
They'll be wrong, bond markets blow up and they get it wrong. All right,
so some people have a view, and also there's a higher yield on the fixed coupon bonds, so people say, well, even if rates did go up 25 basis points or 50, I'm actually going to be compensated by the higher yield, so therefore I still will go for fixed rather than floating. And other people say, no, I agree with Peter, I'm going floating.
The beauty of that bond market, I guess it's like share markets as well, you can fight about this all day.
Yes, indeed, and nobody's right and nobody's wrong.
All right, so are you planning on introducing more? Are you happy with the suite of products you got?
We are happy, of course, today that we got to this level reasonably quickly. But yes, we absolutely are constantly working on new ones, new flavours, new types, etc. To really, basically, the Australian market should have a corporate bond market and should have access to it on the ASX, which is like a giant supermarket with all the bank platforms sitting around it, and it hasn't been the case. So we just hope to be issuing these every couple of months, basically, new ones, new types, and giving people more and more access.
So what's happening to the company? The share price and all that sort of stuff? Well,
our company's not listed, so we're the group of shareholders in the company, the backers, the financial backers of the company. So it will eventually, if we're successful, have a life of its own to go and do something like maybe list or maybe sell, etc. So that's not listed. It's the products that are listed.
Okay, so therefore, is the challenge for you guys now just to market it effectively? Because
education.
Yeah, exactly right.
As you said, your viewers may not be aware. Everybody's kind of had 100 years of looking at shares. Fixed income is a new space, not for wholesale, but for retail, definitely. So we do an awful lot of education to brokers, financial advisors, and through the web and other means.
Has the era of very low term deposits actually made it a lot easier for you to come up with a product like this?
I think it's probably the right time. It was sort of a perfect storm of all the bad things in a perfect storm that really drove the need for this, and it actually sparked the idea in our minds that will all of these big corporates be putting the bonds onto the ASX? No, we don't believe they will. They can just snap their fingers in the wholesale market. So it just created an environment to say, look, there's this post-GFC, obviously helped as well. The GFC has really taught people I need to have fixed income. So there's 700 billion or thereabouts in term deposits, household deposits, cash management. That's 7 or 8 times what it was pre-GFC. So that's fixed income. So people are in fixed income. They maybe just don't call it that.
All right, Richard, if people want to know more, is there a pretty simple website?
Yes, xtbs.com.au is the website. You can go and find out.
Can't find much more simple than that.
Indeed.
Richard, thanks for joining us.
Thanks, Peter.
So it's Richard Murphy from XTB. That's probably the easiest one, XTB. We'll leave it at that. After the break, I'll have an argument with Jim Stewart about disruption.